Today we're going to be talking about a company that has fallen over 55% in the last 5 years, and that is none other than Intel. And this fall has been fueled by a number of different things, but most driven by their bottom line and top line numbers. So we'll dive into those numbers in this video here today, as well as discuss some recent news around the company. So if you enjoy the video, make sure to drop a like down below, and if you want to see more videos like this one, subscribe. As I mentioned, Intel is down over 55% in the last 5 years, but even more recently, the stock has gone through 2 drops of over 30%, the more recent occurring around their earnings announcement for Q2 of 2024. And during this announcement, Intel came through with bad news after bad news. Their second quarter revenue was sitting at $12.8 billion, down 1% year over year. Their GAAP earnings per share was a loss of 38 cents for the quarter. They also announced that they were going to be reducing their headcount by 15%, as well as suspending their dividend starting in the fourth quarter of 2024. So all of this really brings into question the overall health of the business. But this is not something that has been new to Intel. Over the course of the last couple of years, they have seen significant declines in both their top and bottom line numbers. Back at the end of 2021, their top line revenue was sitting at $79 billion. But more recently, their trailing 12-month revenue has fallen down to $55.1 billion. And this sharp decline in revenue was driven primarily over the time period of first quarter of 2022 through first quarter of 2023, where they saw a decline of almost 40% in their revenue. And this wasn't only a top line problem, this also affected their bottom line EPS numbers. In the first quarter of 2022, they posted a quarterly EPS of $1.98. The following quarter, they actually experienced a loss of 11 cents, and this quickly drove down their trailing 12-month EPS over the next 4 quarters, where they hit a low of negative 70 cents of trailing 12-month EPS. And they've been able to recover slightly from hitting this low. However, more recently in the last 2 quarters, they have posted negative 9 cents of EPS and then negative 38 cents of EPS. So it appears that the business is trending again in the wrong direction. And the struggles for Intel really has to do with 2 factors. The first being the weakness that they have experienced in their core businesses. They have 2 core businesses, the first being their client computing group and the second being their data center group. In 2021, their client computing group was bringing in $10.1 billion of revenue in the second quarter. Their data center group was bringing in $6.5 billion of revenue in the second quarter. And these 2 core businesses of Intel have been affected significantly in the last 3 years. Their client computing group is now only bringing in $7.4 billion as of Q2 of 2024, down almost $3 billion over the course of the last 3 years. Their data center group has been cut in half in terms of the revenue that they're bringing in, now only bringing in $3 billion compared to the $6.5 billion they were bringing in 2021. The weakness that Intel has seen in their client computing group has a little bit to do with general weakness in the computer industry, but more so to do with a lot of competition coming into the market, specifically around companies like AMD. And we can see a glimpse of this by looking at CPU sales over the course of the last decade. In 2016, AMD had a market share of around 17.5%, while Intel had a market share of around 82.5%. Here today, that market share has decreased for Intel down to 63.5%, while AMD has about doubled to 33.6% market share. And this is also reflected in AMD's revenue growth. They have seen a lot of growth over the last 5 years, but they have more recently seen that growth tail off a little bit as there is some general weakness in the PC market. And if competing with AMD wasn't enough, Intel has also had to compete with the likes of Nvidia in their data center group. And data center growth is the sole reason that Nvidia's stock has gone up almost 1,000% in the last 2 years. Their second quarter revenue came in at $26.3 billion for their data center revenue alone, which is up 154% year over year. And this dwarfs the rest of Nvidia's business, as their second largest revenue producer is their gaming and AI PC division, which produces only $2.9 billion of revenue. So this massive competition that Intel is seeing on both their client computing division as well as their data center division is really driving down their top line numbers, but their bottom line numbers are being affected by their chip manufacturing business. This chip manufacturing segment is known as as Intel Foundry, and in their most recent quarter, they had a revenue of $4.3 billion. However, one very important thing to keep in mind is the biggest customer of Intel Foundry is none other than Intel. So their inter-segment eliminations is also $4.3 billion. This indicates that right now, Intel Foundry basically has little to no revenue coming from outside sources. And investors are hoping that this will all change very soon, as there have been announcements that Microsoft is likely going to partner with Intel Foundry in a deal that's worth around $15 billion. However, in the meantime, building out this chip manufacturing business has been a very expensive endeavor. In 2024, they're hoping to decrease these capital expenditures to around $25 to $27 billion. This is down 20% from prior projections, and they're hoping that this will continue in 2025, where they're expecting capital expenditures to go down to $20 to $23 billion. And this is all in hopes to bring chip manufacturing to the US. Currently, the largest player in chip manufacturing is Taiwan Semiconductors. Currently, Taiwan Semiconductor holds a market share of 54% in the production of semiconductors, with Samsung being the number 2 player holding only 17%. So Intel is hoping to break into this market and not only produce semiconductors, but also bring that production to the US, because primarily right now, semiconductors are produced in Taiwan, Japan, as well as China. So not only is Intel feeling a lot of pressure from competition in their key revenue driving segments, but they're also having to invest a lot of money into their chip manufacturing business. And this has driven the stock price down in a very significant way. So much so that in the last week, we are seeing rumors appear that Qualcomm is potentially looking to acquire Intel. And the main reason that Qualcomm would be looking to make this acquisition likely has to do with Intel's foundry business. Currently, Qualcomm relies heavily on Taiwan Semiconductors for the production of their chips. If they were to acquire Intel, they could produce these chips in-house. However, an acquisition of this size would be one of the largest in history, which would require a lot of effort to get this passed through the FTC. For me personally, I like investing in turnaround plays, and Intel reminds me just a little bit of Meta a couple years ago when they were investing very heavily into the metaverse. And ultimately, the business was seeing a lot of weakness as well during that time period, but this was more macroeconomic weakness in the ad space. For Intel, I think that there's a lot more concerns for the underlying business and how it's going to produce revenue and compete against a lot of these newer players in the market, whether it's Nvidia or AMD or even Qualcomm. So I don't love Intel right now, but I think it's an interesting company to keep an eye on and see how it progresses over the next couple of years. Before we close out the video, I wanted to give you a look inside the portfolio. The total value is currently sitting at $52,000. We have Alibaba, Apple, Microsoft, Palantir, PayPal, SoFi, and Visa. Alibaba has seen some good moves up over the last few days, which has been very nice to see. Palantir has been on a very interesting run as well, and even PayPal's seen some moves up with the Fed making the decision to lower interest rates. So overall, it's been very solid the last week or two, and we'll see if that continues into the future. With that, let me know your thoughts on Intel. I think it's a very interesting company, but I think they're competing against a lot of very tough companies. When you think about Taiwan Semiconductor and the market share that they hold, it's going to be difficult to pry that away. Also, companies like AMD and Nvidia are very hard to compete against because of how quickly they innovate. So at the end of the day, I think Intel right now is in a kind of tough position, but if they can capitalize on a few things, I think they could see a lot of gains in the future. But with that, keep in mind, never buy a company just because someone talks about it on YouTube. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, how does a rancher keep track of his cattle? Check the comments down below for the answer. Thanks for watching.